Okay, folks, welcome to the Contrarian Trader. This is Bob Desmond, and this is Wednesday's member stock pick request video. This is where we review stock symbols that our members submit for me to review on video. It's currently a free service to our members, but will soon be part of a premium package. Current members will be rolled into that premium package. So if this is a service that you want to take advantage of at our current price, please sign up for the 14-day free trial now. Because to get this service in the future, because it's going to be considerably higher membership fees each month. So act now. Okay, so let's kick it off with a review of a whole bunch of stocks. And this is really why I needed to put a premium package together. I have probably 24 stocks to go over. Let's get to it. Okay, first stock up is for fellow member Jackie. And she is interested in FEYE, FireEye. I love this sector. We are long of another cybersecurity play. FEYE, we were actually stopped out of on a breakdown below support here, and we are looking to get back in. So were I still long of the name, I would hold on to my current position because what you're seeing here is shorts leaning into the stock. And how do I know it's short sellers? Look at the volume. It's below average volume, not tremendous volume to the downside. And we are seeing some bottoming tails. It's a sign of support below. And I think where we're finally going to end up with FireEye, assuming that volume does not pick up to the downside, we're going to retest the support level here at, let's call it 36.85. That's going to be a price point I am going to take seriously when determining whether or not I want to buy the stock. But as of right now, it's simply a watch. I would not sell it. The shorts continue to lean into the name, as I mentioned before. It's trading below the second deviation Bollinger Band in green, and it is becoming a bit overextended to the downside, trading at the lower band of this downtrend channel. I think that this support level here, again, 36.85, very, very interesting and a very attractive entry point, especially if you're looking to build upon a current position. Watch for a double bottom setup on Stokes or even a higher low. Note how we're rolling over on the slow stochastics. Watch for this to loop back up once it gets down to 36.85. And for Jackie, let's take a look at a 30-minute chart, intraday chart. Wow, okay, interesting chart. I'm glad I pulled it back to this one. Take a look at your RSI. RSI is a forward-looking indicator. Granted, 30-minute chart, very volatile. So this could be a short-term pop that we see setting up here. However, we're seeing the RSI make higher lows. Note how we're breaking out above an intraday resistance level, yet the stock price was making lower lows, and we flashed bottoming tails at 37.66. That's a sign of support. What happened into the close, final 30 minutes? A rally. Let's take a look at that volume. So we had some institutional demand. Note that it's well above the moving average. So while this may not be the end of the sell-off for FireEye, it appears as though you're already seeing some accumulation. So the intraday chart looks good. I like it. I would hold on to it. I would look to add 36.85. Okay, next stock up is CENX, Century Aluminum. Daily chart. Okay, you could see where at one point in time the stock had put in a head and shoulders setup. Left shoulder, head, right shoulder. Here was your neckline. Once it broke this neckline, the market told you, you must get out. Now, considerably lower prices, we find ourselves at historical support. Last seen back in May of 2014. Now, when you're looking at a chart for historical support, you must not simply look at historical support levels. You also need to take a look at where is there historical resistance as well. Because you want to see where your upside potential is. And from looking at this chart, we have resistance up at $14.80. So this is a stock that you could consider buying. Today we flashed a bullish key reversal on very strong up volume. Putting in a higher low on ultimate oscillator. Double bottom setup. Bullish. No breakout yet on the slow stochastics or Williams percentage R. But it's a bullish chart. And if you buy this stock, you need to use a stop loss order just below this lower band of the rising uptrend channel. Take a crayon, draw one across. Very simple to do. If you're looking to trade this stock as a swing trade, look to book your profits into $14.80 to $15 per share. If you're looking to buy this stock more as an investment, this should be your opening position down here. Wait for a breakout above this resistance level. Then you look for consolidation, and then you can add more to your position. No breakout yet on RSI. It still remains in a formation. However, putting in higher lows, bullish. Next stock up, Seabridge Gold, weekly chart. Sometimes I can't get a really good feel for a daily chart, so what I need to do is pull back to a weekly chart to get a grasp of where the stock is trading relative to past performance. And one thing that stood out at me was the fact that the stock this week has broken down below support last seen back in November of 2014. It rallied, pulled back, and should have been a nice W formation. It did not hold up. This is a dollar-sensitive play. My guess is the strength in the dollar helped topple this stock. Now, what you could see here is a undercut double bottom. That's when traders see a whole bunch of stop-loss orders piled up below prior support at 5.92. And what will they like to do prior to opening up a long position? They blow out all the stop-loss orders. The suckers who put their static stop-loss orders down here and forgot all about them were taken out of their positions, didn't know it hit them, and longs came in and bid the stock back up. Now, would I go buying it based upon what could be just simply speculation on my part? No. I need to see it close back above this support level. If we get it closed back above this support level, which is now going to act as resistance, I would consider buying the stock. Not until then. We do have a bottoming tail. It's already a sign that you've had buyers move in and bid the shares off the lows. Volume on a weekly basis is trending high. We still have 2 trading days left in the week. So my guess is that you have a tug of war between bulls and bears going on. Now, note on Ultimate Oscillator, where we have broken down to new lows on price, we're actually putting in higher lows on the Ultimate Oscillator. That's a bullish divergence. Out of curiosity, let's take a look at a daily chart really quick. All right, daily chart, clear and defined downtrend. We bounced off the lower band of the declining downtrend channel. No shock there. Today, we rallied, but we found resistance at what should have been prior support and failed. We need to get a close above 5.87, or even better, 5.92. Then watch for a breakout and a close above this upper band of the declining downtrend channel. Consolidation, 3-day rule. Members, you know what a 3-day rule is. And then you can look to build on your position. Volume today was good. Stochastics are putting in higher lows. I'm not going to be a bit surprised to see them squeeze this stock higher. Next stock up, Chesapeake Energy. Fellow member Jesus sent me an email about 20 minutes ago. I only caught the subject line. Director, insider bought a block of shares, which is usually good to see. But on the weekly chart, I believe this is a weekly chart. Yes, weekly chart. This is not a stock chart that is awe-inspiring. A couple of things stand out at me. One is that you're seeing a short squeeze off of the 1338 level and up and into resistance at $15 per share. We've since pulled back. Ideally, where I would want to buy these shares is right down here at a minimum $12.96, or even better, $12.04. These are the key support levels I would be watching right now. I think that what this is here is a short squeeze. Also keep an eye on your 50-period moving average, which is, absent an act of God, going to take out the 200-period moving average. Watch your slow Stokes for a double bottom rollover like you saw here. Daily chart of Chesapeake. Okay, the first thing that jumps out at me is that you have a little cup with handle formation going on in RSI, and we are breaking out on RSI. A consolidation between 1338 and 1488. Today we flashed a hollow candlestick. So we have a higher low and a slight breakout on the daily chart. You may see a rally on Chesapeake, short-term rally, which in all probability is going to fail and will probably roll back over. So if you're looking at it from a swing trade perspective, in fact, let's draw some trend lines. Okay, a lot better. All right, so here's the cup with handle formation I mentioned on RSI. Here's our breakout, bullish. Here's our breakout on price, hollow candlestick today. So we had a little bit of a tug of war between bulls and bears. We'll give it to the bulls, given that it closed higher, A. B, we had rising up volume. So we should see a bias to the upside. Use a stop loss just below, I'd say, 1371. Give it some room to pull back, consolidate, and retest this breakout point. Watch for a double bottom setup on Ultimate Oscillator, a higher low, which would be bullish. So short term, we may see a continuation squeeze higher on Chesapeake. Longer term, I need to see the mid to low 12s on Chesapeake for an investment. Canadian Solar, CSIQ, daily chart. We were in a steep uptrend, resistance at 3640. Here's the value of using trend lines and resistance lines, support lines. We identified that there was resistance back at 3658. So we have a clear and defined resistance level. We broke down below a prior support level, but this is a fairly aggressive move higher. So to see it pull back some is no great shock. I think that this is a far more reasonable lower band of the rising uptrend channel here. Watch 3332. If you see the stock trade down and below this lower band of the rising uptrend channel, you need to get out of the stock. This week has been very, very bearish price action. Down day on Monday, topping tail on Tuesday. Today, you had a topping tail resistance at $34 per share. I would either wait for a pullback to support to open up a position, so that way I just put my stop loss just below, or B, wait for a close above $34 per share. The preferred entry point is a pullback and a retest against this lower band of support. Keep your stop loss tight. Volume, very, very anemic to the upside, high to the downside. That should concern you. Choppy action on the indicators. That is bearish. Watch for these slow stochastics. They need to move higher. If you see them trading below, both the fast and the slow line trading below 50 at the close on Thursday, you probably need to really reevaluate whether or not you want to be a part of this trade to the long side, and I wouldn't short it. Molycorp. Last time I spoke about this one was back here at this extreme oversold level, and the stock rallied, about 400%. All right, so now we've pulled back. We know where our known historic support level is, 28 cents. Now, we rallied off of 32 cents, so what you could be seeing here is a higher low. Definite resistance at 40 cents per share. I would watch for a pullback and a retest of at least 32 cents per share. Put a stop loss order in just below that level. If you're fairly optimistic and you want to give it some room, put a stop loss order in just below 28 cents per share. Slow stochastics, coiled, look ready to pop. Volume is very low. We have a breakout on RSI, which is bullish. So you may have an instance where you have an indicator leading price performance. Just use a stop loss, right below 32 cents per share. If you break down below 32 cents per share, which was a support level back in January of 15, you're going to see 28 cents per share or lower. NDRM, Neuroderm. When I first saw the symbol, I kept thinking Nordstrom. Okay, so what we have here is a stock that was independent formation. It has since broken out. So great price action, up until today. And I'll get back to the price action of today in a moment. Taking a look at the ultimate oscillator, it is not reflecting today's price action because it was a reversal day. We closed well off the highs of the day. Not good. What is probably going to happen is, and this is the good part, we're probably going to get a pullback and a retest of this prior resistance level, which should now act as support. What you want to see is a defense of the support level, and if you get that defense, a bottoming tail like you saw back here, like you saw here, a bottoming tail is a sign of support, then you could buy the shares. So I think the breakout will probably continue higher. However, I think you can get it at a better price at this support level. If it continues higher, you could buy the stock. Just use a trailing stop loss order. RSI is not broken out yet. And I don't like the lower highs on Ultimate Oscillator. Ideally, you get a breakout on Ultimate Oscillator. Let's check out the intraday chart out of curiosity. 30-minute chart. All right, so the stock really got hammered after the morning open. The stock could pop tomorrow. May see a further pullback. And this is the breakout point here, around 1340. But I think this stock is probably, in the next couple of days, going to consolidate, confirm that breakout, and then move higher. So I think this is a stock that could be bought. AMCC, Applied Microcircuits. I haven't looked at this stock in years. All right, so another case where the market sent us signals. This is a weekly chart. Again, using weekly charts because the daily chart is not telling me the complete story. We want to take a look at where the stock is traded on a historical basis. So back in 2013, it began the head and shoulders setup, which culminated in the beginning of 2014. So here's your left shoulder, head, right shoulder, neckline, a break below that level in March of 2014. You had to get out. We've been in a downtrend ever since. Now, we bounced off of the $4.61 level in February. That did act as support back in July of 12 and in August of 11. So, good rally off of that support level. Now what you're looking to see is whether or not this stock is going to either A, consolidate further here at the $5 per share level, put in a higher low, and then begin a breakout above the upper band of this declining downtrend channel, or B, will it pull back, retest 461, put it in a double bottom retest, or even better, from my perspective, is pull all the way back down to $4.28 to test historic lows, and we'll see whether or not that support level holds. Given the consolidation here over the past few weeks, I think that what's probably going to happen is we're going to see a consolidation for the next couple of weeks, and then we're going to probably attempt a breakout, and the stock could be bought on a breakout. Putting in higher lows on the slow stochastics. Lots of choppy action. Williams percentage R, not awe-inspiring. Let's check out the daily chart. And here's what I mean. This is really a directionless chart. If you're hell-bent on buying shares in AMCC, you need to use a stop-loss order. If you want to keep it tight, right below $5 per share. If you want to give it some wiggle room, right below $4.61, and then get out. Then revert back to your weekly chart. Look for those historic support levels for an indicator of where the stock may bottom out in the future. Still trading below its 50-day moving average. Really, it's just a stock that's consolidating and not doing much, which is why we needed to take a look at the weekly chart. Next stock up, VRSN, VRSN. Nice uptrend. However, the problem is that as we began to make new highs, the RSI was putting in lower highs. That's not a good sign. So keep an eye on the RSI for either A, a breakout, or a breakdown. If you see a breakdown on the RSI, I would not touch this stock. Watch for a pullback on price to the lower band of support. We may just get there. Down volume has been drifting off, dropping. That's bullish. Choppy action, lower highs on the indicators. That's a bit of a concern. So if you're looking to open up a long position, I would wait until we get down to this lower band of the rising uptrend channel. Watch for defense of that support level. If you are currently long, looking for a place to add, you could either A, add at this lower band of support, or B, add on a breakout and a close above 67.50. Just keep an eye on this RSI. You want to make sure that as the stock price is breaking out, it's confirming that breakout. Broadcom, weekly chart. Another one. Daily chart's just not telling the story. We need to take a look at the big picture, the weekly chart. Where has the stock been? What's it been doing? So we can get a real flavor for where the stock may be heading. And as I was mentioning just on the prior chart, the RSI was making lower highs while the stock price was making higher highs. We attempted to break out on March the 16th or the week of the March the 16th, and it failed. It couldn't break out above 46.31. This is why I always say wait for a breakout and a close above prior resistance. That failure led to this current 2 weeks worth of carnage on the stock. We have a bearish key reversal so far this week. I would wait for a retest of this lower band of support before I even considered getting involved with the name. And if it breaks down below this support level, it could be a short. Breakdown on Ultimate Oscillator. Bearish chart. I wouldn't buy the stock, and I wouldn't short it just yet either. Alibaba, daily chart. Don't need to take a look at a weekly chart on this one. Not enough historic data. It's just not performing well. It's not working. It was in a triangle formation. It broke out on March the 27th, and then it rolled right back over. This is called a breakout point failure, a very, very bearish event. I would not buy this stock. I would watch for a pullback to the $80 per share level. If it does not hold, it's going a lot lower because there is no historical support below. Down volume has been rising, but it's still below average. Rolling over on the slow stochastics. I think that the path of least resistance is to the downside with Alibaba. I would avoid the stock right now. And if it breaks down below 80, it could quite very well be a short. Tesla. We shorted Tesla about 8 months ago. We saw this breakdown coming. Left shoulder, head, right shoulder, weekly chart this is. We saw this breakdown coming because we saw that the stock was making all-time highs, yet the RSI was making lower highs. That's a bearish divergence. Then you saw these topping tails. That's a sign of sellers above. And the stock went into a correction. We rallied once again. RSI behaved well. But once again, we flashed topping tails and it put in a lower high. This is the market sending you a signal that, you know what, you better consider booking some profits on this bearish key reversal the week of September the 2nd. Then we've gone into our downtrend. We broke down below the neckline of the head and shoulder setup. If we break down below 177.22, which marked the lows of May the 5th, 2014, the stock is a short all day long. I would not short it just yet. It's trying to find a bottom right now. It's making higher lows on Stoch RSI. No breakout yet, just a consolidation. I certainly would not short the name. Let's take a look at the daily chart. Okay, so it remains in a downtrend channel. Good bottoming action on March the 27th and then on the 30th. If you buy this stock, if you have to buy it, you have to scratch that itch, use a stop loss just below 181.40, then get out. If we close above let's call it 193.76, you can look to add to your position. Down volume is dropping off, bullish. So we may see a rally in Tesla in the next several trading days. The question is will it last? And we'll have to revisit it. Higher lows and slow stochastics. So short term, possible setup for a swing trade with a stop loss right below 181.40. Longer term, I'm concerned about that head and shoulders setup on the weekly chart. ASPS, Altisource Portfolio Solutions. Never heard of it. Weekly chart. Okay, another one where the market sent us signals. Head and shoulders setup. Left shoulder, head, right shoulder. This time we had a neckline on a 45-degree angle. Once we sliced it, you had to get out. Now we've been in our downtrend channel for several months. We bottomed off of $12.28 the week of the 16th. Now again this week we're finding support there. So we may see a rally fairly soon in ASPS. Good double bottom setup forming on the slow stochastics, very bullish. RSI is very, very oversold at 1868. So if you buy these shares, you need to use a stop loss order just below $12.28. Look for a rally up and into $15 per share. If you're doing this for a swing trade, you need to book profits into that resistance level. If you're looking to buy this stock as an investment, I would buy a small position here, wait for a breakout above this upper band of the declining downtrend channel, watch for a consolidation, and then a breakout higher, then you add to your position. Possible double top on the ADX line in red, double bottom in green. That's a bullish setup. The signal line on ADX is above 60. Again, bullish. So I think this is a stock that's healing. It's showing definite signs of healing after a fairly dramatic sell-off. But this is what you call a really mature sell-off. I think the bottom has probably been put in on ASPS. LEVY. I'll put it to you this way. If you're considering buying this stock, I beg of you, buy one share. If you buy more than that, it's just a travesty. It's not trading, it's gambling. This is a stock that has a story that is not going to end well. I will put it to you that way. We are positioned in LEVY. Read into that. If you're not a member, become a member, and you hear a lot more about it. But this is a story that is not going to end well. I know this is a hot stock in the Twitter sphere and on message boards. Folks, please, I beg of you, these stocks do not have these trajectories forever. This story never ends well. And I will point out to you another stock which I discussed a couple of weeks ago, had a very, very similar chart. HCHC. Look at the trajectory this stock was on and the correction. Now, go back and take a look at LEVY. By the way, I think HCHC, that's ready for a buy. Now take a look at LEVY, and this is a stock that's even more overbought than HCHC was. This is not, folks, this is not going to end well. Please, if you're looking to buy this stock, don't. Watch it. Paper trade it. Owen Financial, OCN. I like the chart. I'll keep it simple. Daily chart. Take a look at your cup with handle formation on RSI. You probably say, I never heard of an RSI with a couple handle formation. Here at the Contrarian Trader, you will. We look for leading indicators. This is one of them. Would we use this as a reason to buy it right now? No. Price and volume action mean everything. They trump all else. However, when you're taking a look at the price action and you're seeing that it's consolidating against the lower band of its rising uptrend channel, and it's in a triangle formation, and you have a clear and defined stop loss point just below $7.75, this in and of itself is a pretty setup. And then when you introduce into the mixture the fact that I have an RSI like a coiled spring, like a cobra in a basket ready to strike, that makes it really sexy. And I don't use that phrase often. I think the chart looks really good. Now watch it break down on me. I'll get made a fool of. So it was down day today, but that's okay. It's consolidating. Look at the volume. Does this look like Goldman Sachs was in there selling shares? No. This is not hedge fund selling. This is a very, very minor distribution day. Consolidation, very, very healthy. As long as it holds above $7.75, this stock is a buy. Ultimate oscillator is a bit of a concern. We broke down below support. Just keep an eye on that. I don't think it's a reason to avoid the stock. Just keep an eye on it. It's just a watch out. We may get a double bottom setup on the slow stochastics. I think that's when you can really get aggressive with the name. Assuming that, the caveat being, assuming that we hold this rising uptrend line. Okay? Just because we get a double bottom setup on the slow stochastics doesn't mean that we go buying the stock. No, it has to go hand in hand with holding the support level. And that could occur just by virtue of the fact that the stock continues to trade sideways inside this triangle formation. And here's another example of a double bottom setup like I saw back here, right? Very pretty. Good stock. DYAX Corp. DYAX weekly chart. Oh, boy, I remember this one. I took a look at the daily chart already. Okay. Wow. What do you say about a stock that has moved like this? It's a biotech stock. The biotech stocks have been red hot of late. However, that trend appears to be pausing considerably. So when we're taking a look at stocks like this, we want to pay attention to the index as well. And the index is overbought. On a weekly basis, on a monthly basis, it is overbought and has been pulling back. Now, the stock, I understand, has had some good news either today or the past couple of days. It's up almost 56% on the week. Now, what you're looking at here in red, if you're looking at these Bollinger Bands and wondering what I am looking at, why do I have two sets of Bollinger Bands? I use two sets. In green, you have the 2 standard deviation Bollinger Band. That is your out-of-the-box Bollinger Band. Every charting software is going to default to that. I like to use a 3 standard deviation. A 3 standard deviation gives you an edge over other traders. Typically, a stock is not supposed to be trading above a 3 standard deviation. Remember, the Bollinger Bands are based upon the historical relative price performance of the stock. So when you take a look at a stock that has RSI on a weekly basis above 85, it is overbought. Add to that the fact that it's trading above the 3 standard deviation Bollinger Band. That's another reason why you need to be saying to yourself, is it really wise that I go buying this stock right now? Is there a better risk-to-reward entry point? I would argue that if you're looking to trade this stock as an investment because you're a biotech enthusiast, there is a better opportunity coming down the road. Today or tomorrow is not the day. Massive, massive accumulation. This is institutional accumulation. I don't know if there were enough short shares held short to account for this volume spike. I'll leave that to you to research. Higher lows, double bottom setup off of the 50 level on Ultimate Oscillator. Very, very bullish. Very extended on your slow stochastics. So the weekly chart is bullish. Does my tone of cautiousness imply that I don't think that this stock can head higher? No. It probably will head higher. Let's go to a daily chart. Okay, DYAX to me is setting up as a beautiful, beautiful short. That being said, would I short it tomorrow? No way on earth. I think that they're probably going to continue to move the stock higher. The institutional longs are going to take their pound of flesh out of anyone who's short this stock. We have RSI at 85.78. This could easily see RSI above 90. So if you are a reader of technical analysis for dummies and they tell you to short a stock, once it goes above 70, look at how much money you would lose. Trust me, you do not want to go shorting the stock tomorrow. Let's take a look at an intraday chart to see how the institutions were positioning themselves into Thursday. So we gapped higher on Wednesday, pulled back, consolidated. 24.42, rock solid support. Fast forward to the final couple of hours of trade, you had institutions moving in and buying up shares. How do I know they were institutions? Look at your volume bars. This is not mom and pop buying 100 shares and speculating. So if you're dead set, you must buy this stock tomorrow. Ideally, you get a pullback in the morning, 24.42, it holds, you buy, you put a stop loss just below. Because if it trades below 24.42, you have to hope that somewhere along the line, it'll find support. And I'm not in the business of hoping. I'm in the business of having factual information I could trade off of. So if it trades below 24.42, if anything, it's a short. However, if it gaps down tomorrow, rallies back, recaptures 24.42, I would be a buyer with a stop loss just below the day's lows. If it continues higher, I would use a trailing stop loss order. Now, if you're going to momentum trade this stock, I would wait for a tick above 26.11. You need to put that trailing stop loss order in, keep it tight, and then let the market take you out of the trade. HPQ, Hewlett-Packard weekly chart. We may see a rally soon. I mean, I know my tone is like I'm about ready to yawn. I mean, this is a stock that it's broken. It's a broken stock. I think that any rally will probably be sold into. You have support at 31.51. It's acted as good support before, which is why I feel confident in saying that it will probably hold, unless, of course, earnings come out and they just tank the stock. But I see no real reason to be buying shares here, especially for the long term, unless you think that on a valuation basis that the stock has value and that the support level, if you're looking for a good support level, will hold. And then we're very close to that support level, 31.51. Other than that, I would avoid the stock. It's not a short unless it breaks below and closes below 31.51. Daily chart, hollow candlestick. I hate hollow candlesticks. It's really a sign of lackluster conviction on the part of bulls, and sellers just moving. They close it higher on the day, but just barely higher. Volume was good. We're putting in lower highs on the ADX line in red, higher lows in green. It's bullish. Let's check out the intraday chart, see if there's anything happening intraday that may give us a signal. All right, here's something interesting. Let's draw a trend line. Okay, HPQ 30-minute chart. All right, first thing that jumps out at me is the RSI, which was in a pennant formation. Note how on today, the 1st, it broke out. It's pulling back and retesting the breakout point. It appears poised to hold. Price action. We rallied at the open. We've pulled back, and we are now retesting this lower band of this rising uptrend channel. We're putting in higher lows. Remember, this is a 30-minute chart, so it's volatile. Now, I wouldn't buy shares in HPQ until we broke out above, at a minimum, this, I'll call it a secondary downtrend line. The pivot point is 31.52. You can open up a position on a breakout above this declining downtrend line, and I would look to add on a breakout above this primary downtrend line, which has a pivot point of 31.86, which marks the high of the day. So in short, what I'm saying is add or build on strength. Let the stock show you it has the strength to move off of this support level and move higher. Now, the reason why I'm sounding a bit concerned on the chart is that look at your slow stochastics. We are breaking down on the slow stochastics. We broke down below the lower band of support. So the slow stochastics being a forward-looking indicator, this could be an instance where we have a indicator leading price performance. Would I short the stock based on this? No way. It's not exciting. You need to see a breakout above this resistance level. Lots of choppy action. Choppy action is bad when you're looking to buy a stock. Now, the price action at the close is very interesting. You have a doji star formation, which is a sign of indecision. You have price action, which looks very, very bearish. However, my guess is, let's drill down to a 1-minute chart. My guess is you have a ton of, or at least one big up volume bars. And here you go. Here they are. So you had some stealth buying into the close. This is, again, a 1-minute chart. We were looking prior at a 30-minute chart. So, interesting. And now you have a game plan moving into tomorrow. Facebook. Let's take a look at a daily chart of Facebook. We had a breakout on March the 19th, and you had a strong continuation move higher on very strong buying. Big volume bars. Take a look. Big volume bars. This is institutional demand. However, we pulled back and we broke back down below the breakout point. Very, very bearish stuff we're talking about here. This is not good. This is a confidence killer. Think about all these guys who bought back here, institutional players, who bought this breakout and were hammered. This impacts confidence. So, we retested a prior support level. It held. I'm not going to be a bit surprised to see Facebook break down below this support level. It may not happen until earnings, if earnings come in disappointing to the street. But this is a very bearish price action. I would not be a buyer of Facebook. I wouldn't short it unless, of course, it broke down below the support level, but I would not buy it. Could it move higher? Sure, but there's too much risk. We'll take a quick look at the 30-minute chart. The key reversal on the stock market today implies that we will probably see higher highs leading into the back end of the week and probably into earnings. They need to spike the market into earnings, paint the tape. So we were at extreme oversold levels. They bid Facebook up off of prior support, last seen back on March the 18th. Rallied, pulled back, put in a higher low. They rallied into the close. You'll probably see a short-term rally on Facebook. All the indicators are implying that. Higher lows on all these. So my guess is in the very short term, you're going to see a rally in Facebook. Will that rally hold up? Will it get sold into? I'm not going to be a bit surprised if it does because you have a crisis of confidence that's going on due to this breakout point failure. Illumina. Very interesting chart to me. I'm going to go over the weekly and daily chart. I was up in Salem, Massachusetts at the Cabot Wealth Management Seminar in September of this past year, late September, early October. And this is one of their focus stocks, Illumina. And I'll tell you, the presentation they gave about this company was just awe-inspiring. What they are doing with their technology, it's just amazing. I think it's the human genome that they are splicing and dicing. And I have no doubt in the future years, this is going to be a stock that is probably going to be a lot more valuable. But as it stands right now, I have to say that I'm negative on the shares. We had an attempted breakout in January, which failed. Look at the bearish key reversal. This was the market sending you a signal. Another signal the market was sending you is that as we were making higher highs on price, RSI was making lower highs. It was breaking down. Now we are trading below the lower band of its long-term uptrend line. It is breaking down. So while I love the company, I love what it's doing, I think it's phenomenal. I think it's one of the most interesting stocks out there. And it's probably one of the least known. I can't touch this stock with a 10-foot pole right now. I think it's probably going to head lower, daily chart. All right, so here's our line in the sand with Illumina. We have a head and shoulder set up on a daily chart. Left shoulder, head, right shoulder. Here's our neckline. Now, if we consolidate for the next several months and hold the support level, I'd look to buy the shares. I want to buy these shares. I want to be a part of this company. But being the trader, being the technician, I have to watch the price action. And the price action is not good longer term, meaning on a weekly chart. And if we break down below 178.52, we're going a lot lower. Next stop, 172.09. Then we're heading down probably to the 150s to the 145s. So be very, very careful. And don't get disappointed if you're long of this stock by me saying that it's got a head and shoulders setup. That doesn't mean that it's going to break. It means that it might break. It's just something to watch out for. Don't go selling your shares tomorrow because this guy on the contrarian trader made mention of the fact that there's a head and shoulders setup forming. It only matters when it breaks. I've seen more times than not head and shoulders setups get negated and the stock heads higher. It's a very well-known setup, and there's a lot of software out there now that picks off this stuff. You can run a scan for head and shoulder setups. And shorts try to take the stocks down. What do the longs do? They come in and they squeeze the shorts, and you have a negation of the head and shoulder setup. So don't go selling your shares until we get a break. If you're looking for an exit strategy, if you've held from up here till now, I would hold. Wait till it breaks. Volume is rising and above average. Great company, price action, disappointing right now. PNK, Pinnacle Entertainment. Another one that I believe is, in all likelihood, is going to get hammered like a baby seal. I would avoid it long, and that's it. I'll leave it at that. We have an interest in this name, and I will leave it at that. And that's it, folks. If you have any questions, shoot me an email. Don't forget about our 14-day free trial offer. If you get any value out of the member stock pick request, remember, this is a service that is going to be premium soon. If you join now, you become a member, you are locked in at the current membership rate for the lifetime of your membership. So join now. Everybody have a profitable trading week. Be well, and I will talk to you soon.